Hey everybody, Scott,
Hey,
Steve.
hello.
I would ask how you're doing, Steve, but you've already told me.
Hanging
So
in there. Yeah.
it is Monday. It is Monday, and the market kind of, I guess, felt a little ill today as well, as we will soon see. Welcome everyone to another edition of the Office Hours webinar. I'm your host, Jamie Hodge. I've got Steve riding shotgun with me. Today is the 17th, so September is already halfway behind us, and boy, starting to get interesting out there. Before we get into the good stuff, though, we want to take a quick moment here to make the lawyers happy. Just let everybody know that all the information that we share with you guys, not only in this webinar, but any of the other 8 webinars that we host throughout the week, strictly for educational purposes only, not to be construed or misconstrued, I should say, as investment advice. If you do need investment advice, please seek out a registered investment advisor or a licensed broker, some other licensed individual that can help you out with that type of business. Okay. For the newcomers and for all you regular people, please be patient. I want to give everybody a chance to see what we have here other than our award-winning technology. Sorry about that, having a little trouble with my mute button. So we've got this great technology, one-of-a-kind technology, but we've also created quite the vibrant community around the technology. Up here in the upper left, you'll see it all kind of starts off very showcasing the technology and his trading style and using it real time as he calls out his trades to the room. And, you know, depending on the day, anywhere between 400, 500, 600 people in that room on a daily basis. It opens up 30 minutes before the open. The nice thing about it is the price, which is $0.00. So if you've shopped around other trading rooms to hang out in, you know that most of them are not free, and you know quality is another issue. But when you're part of the TI family, you get that for free. So if you have not been taking advantage of that resource, hop on over to the trading room, sign up. It's pretty easy, and see what you think. Of course, you got me on office hours Mondays. Steve rides shotgun with me. Trade of the week, Steve takes the helm, or hopefully takes the helm tomorrow, with the trade of the week, and Andy Lindloff rides shotgun with him. Hump Day, Wednesday rolls around, we like to do something completely different and bring Dan, the CEO and founder of Trade Ideas, in. Also, our Chief Technical Officer, Brad Williams, rides shotgun with him, so always entertaining. Now, on these 5 o'clock Eastern webinars, Andy's going to round those out on Thursday with the Trading Studio, and I ride shotgun with him on Thursdays. On Friday, we like to do it a little bit different. From 11 a.m. to 2 p.m. Eastern, it's pretty much a trade ideas free-for-all. Any type of question that you have, whether it's a configuration issue or something else, you can bring that to the Friday support webinar. And typically, it's myself, Sean, Steve, and Andy all in there attacking the issue with 4 minds instead of 1. So take advantage of that. We've been getting a lot of good feedback. Now, these are the 5 o'clock Eastern webinars. And we've well, I say recently, it seems recently, but I guess time is passing. We've folded in the TI University webinars to take the place of our one-on-one sessions, which we used to offer, but since we've got so many clients here now, one-on-ones just aren't that feasible to do. We do still offer a paid one-on-one session of $99. So if you're interested in that, you can cruise on over to the website and sign up for a paid training session. So for the TI University, we start off on Monday with 101 for beginners, go on into Tuesday with 201, Wednesday 301, and then round it out 401s, which I teach on Thursday. So a great place to learn, especially when you're new. Never even hurts to come in there and get a refresher course from time to time, even if you've been using the software for a bit. So between our 5 webinars that we just went over and these, we're doing a total of 9 for the week. So no shortage of educational and help webinars out there. Come one, come all. Of course, we always like to point out how well received our AI module, and when I say module, because the first Holly was released right at the beginning of 2016. This graph represents our growth in subscriber rate since we released the original and first Holly 1.0, or what we like to call the Holy Grail. Obviously a play on words there. But that's the one that started it all, and we've since added 2 additional AIs to the mix as well, Holly 2.0 and Holly Neo. And we'll talk about some of the Holly trades here in just a little bit. And then, of course, the good stuff. What are we going to talk about today? So, Scott, I see you removed the one slide for the summit. I'm assuming you want to save that for the end. I had it in here, but that's fine. We'll just let you cover it at the end there. So let's just get into the agenda for the day. And Steve, if you're ready, I will pass the baton, and you can talk about this little bit of a softness that we had in the market today.
Yeah, we hit a soft spot, so let's talk about it. All right,
Yeah.
let's show my screen. All right, welcome to my desktop, everybody. Let me just move that over so I get some extra space. All right, so let's start where we always start, the S&P 500, the benchmark water level that all funds and performances are measured against. Now, last week, let's count back 5 candles. Well, let's see, yeah, 1, 2, 3, 4, 5, and then we had Monday right here. This was the 10th. Perfect, so that little red candle was Monday. My observations back here were that we pulled back and we filled that pivot level rather perfectly, maybe give or take a few dimes, and then started to bounce back up the following day, another green candle, and then working higher. But towards the end of the week, we kind of petered out, it looks like, just below that all-time, oops, I did not mean to do that. Okay, I'm trying to draw just an orange line here. So this is all-time highs here in the S&P 500. And what I noticed is that obviously the red candle staring us in the face, the red candle of softness, selling, and weakness today, we didn't even get back to the prior levels to even try and test that. So there's a little bit of a caution flag coming up here. I say a little bit because maybe it's something as simple as just a simple gap fill over here on this little gap area that we had from last Wednesday in the SPY. I guess we'll find out tomorrow, because as it sits, if I zoom in here, we are sitting above the 10 period and above the 20 period. So no real technical damage in terms of breaking and closing below these key moving averages. But we did happen to fill that little gap of price there. So tomorrow, if we reverse and head back up higher, then it's almost like no harm, no foul. It'd be easy to say that. However, the NASDAQ has been leading us a lot lately. The NASDAQ's not looking as vigorous, let's say, as the S&Ps. We have a bigger down candle today. We did it on more than normal volume. Gave away back almost 1.5% in the NASDAQ versus what was the change in the SPY, only 5.5%. So NASDAQ had about a 3-time worse day today. And I can tell you why. Before I do that, though, look at the respective gap here in NASDAQ. We filled it and blew right through it. So the reason I'm saying, there's nothing to worry about, and the reason I'm not saying there's nothing to worry about out there, or there's no bear case out there to be made, which is what I said last week, now we have a little bit of conundrums working on here. We have a lower high. We didn't get back to test all-time highs. We filled the gap, but stayed above our key moving averages. However, and here's where I will show you, the NASDAQ's a different story. All right, let's take a look at a few key components of what the NASDAQ did today. All right, our friends over at Google, rough day. Matter of fact, they seem to have a date with some serious downside support here. Even the swing stop of Trade Ideas Logic is showing us the level there. And I have a feeling tomorrow, maybe even on the open, this level is going to be tested over here in Google. And what happens after that test is really what we're all looking for. Is there follow through to the downside, or is there just a running of the stops and then a big reversal and a wick back up? That's obviously what the bulls would want to see. But again, back to my comments here, why was the NASDAQ so weak today? One more thing before I do it. I was chatting with a good trader on social media on Friday. He said Google was starting to look like a reverse bear flag to him, or a reverse short flag or bear flag, whatever you want to call it. I fully agreed. Big downdraft and then a little bit of upward movement, sideways, upward, but right into the hand that catches all weak dead cat bounces on the downside, which would be that 10-period moving average, rolled over, crossed below the 20, crossed below the 50. And that was the backstop, the net, if you will, that caught the price action of Google and threw it back down to lows, which I believe we are going to test again tomorrow. Let's take a look at Facebook. Oh, same thing's going on over there. Look at that big swing stop level here, very close. We're threatening with that today, and there was a bit of a threat even this morning. It looks like it went through, but did come back up. But we still have a lower high, a red candle. Pretty ugly looking chart over there in Facebook. What about Amazon? Amazon had a rough day. What about Apple? Apple had a rough day. So got not only that, but a lower high as well. So you're starting to see what's happening over in tech land. Primarily a lot of these FANG stocks. Netflix, we forgot to look at Netflix. They're part of FANG. Big red day on that one, blew through its gap and closed on lows. So the NASDAQ is raising some concerns here. And I think we need to see what's going to happen tomorrow. Again, a different story over in the S&P, simple little pullback, gap fill, very easily could move higher. But with the damage that we had again in tech, 3 times the downward movement over there in the Qs from primarily some of the stock symbol charts I have just shown you. So that's a bit of a concern because this isn't the Dow doing this. Nobody really cares about the Dow anymore. That's your father's Oldsmobile. And we care about tech, and that's the NASDAQ. And we care about diversity, and that's the S&P 500. So, you know, a little bit of conflicting signals, S&P okay, but NASDAQ throwing up some warning signs today. Now, what I'm really going to be watching for tomorrow obviously would be a reversal to kick the price back into play for the bulls. But if, and a big if, we close below this blue line, which is the simple 50-day moving average, look how long it's been since that happened. We tested it back here in June, tested it back here in early August, late July. Got close to it last week, 6-7 days ago, but here we are, a lower high rolling back over. I have a feeling this blue 50-day moving average is going to be tested tomorrow. Now, there's nothing wrong with blowing through it and then finding some late day buyers and then bouncing back up and creating a nice little downside wick, kind of like we have over here on these 2 days. There's nothing wrong with that. As you can see, subsequently, the price did move higher. Where I get concerned is when the price starts closing below these moving averages. And I also, would be remiss not to say, the Qs did not close above their pivot line. All right, this was the pivot line we defined last week. They got back above it, and then they rolled back over. We're back into no man's land here. So for now, even that lower swing stop area is kind of showing us our new trading range. And if we break below and close below that 50-period moving average, well, then there's a very good chance we may be moving all the way to the low end of this range tomorrow. But that's all prediction right now. We got to wait and see how the things trade. So S&P, not that great, but Q's definitely throwing up some caution flags. The IWM, which is the Russell 2000, this particular ETF measures the strength of these small cap stocks. And what can we see from this? Well, we might have to redraw this pivot line. Here's a pivot line that I see was resistance, resistance, resistance. We pushed through it, pulled back to it, bounced off of it, been chopping around, and a big ugly candle today, throwing the price back down into the prior range that we were in. So not a lot of good to talk about here either in the Russell 2000, also down over 1% today. And then lastly, the Dow, not too bad, but when we zoom out, we have to remember this thing hasn't even been to all-time highs yet, like the other indexes that we have been visiting. So again, the Dow is just kind of the old sleepy, your father's Oldsmobile. Nothing really to glean from it. I like to pay more attention to the first 3 that we just highlighted. So Dow and S&P, a small pullback today, but bigger pullback in the Qs and the Russell 2000. So I think tomorrow, what we need to see in the spiders, again, is to hold these levels today, hold these 2 moving averages, and then move back up into today's range and start to maybe make this look like a little cup and handle. But then again, we've got the ominous Qs who really gave up today after putting in a lower high. I'll be watching the close in relation to this 50-period moving average tomorrow. So tomorrow when I do my webinar, we'll have more data to talk about, but that's kind of the caution flag, the things that I'm seeing today that I wanted to make you guys aware of. And the stocks within the Qs certainly are one to keep an eye on tomorrow. So if you see Facebook and Google just breaking down below those levels and falling more and not bouncing back up as the buyers lap them back up, well, that could be our first signal in individual stocks as to what might be happening in the bigger picture. So that's what I'll be watching. And I'm about to lose my voice. So back to you, Jamie.
Hey, good stuff, Steve. Good stuff. So tomorrow could be the moment of truth, because obviously the tech stocks are what drug us up here, and when the worm turns, yep. What drug us up could also drag us down.
Exactly.
Mm-hmm. Gotta be interesting, and of course, let's just I just want to look at that Twitter chart again because, I mean, you've been talking about it for so long. We've all been talking about it. It's took another little leg down today. Going to go down here.
I had a little friendly banter. Put your cursor a little bit more left on that price action up there, and then go up to the price action. Yeah, a
Yeah,
little bit more to the right. You know, a few
here.
days after that, maybe a couple more. I had a little friendly banter. Yeah, around that area. I
Right.
had friendly
Hmm.
banter with some guys on social media, and why I thought Twitter was going lower. And they thought, well, we think it's going higher. I said, well, can you just tell me why? I said, well, yeah, well, Jack's reining in all the bad people, and they're doing a better job at this and a better job at that. And it was all conjecture of what they're doing behind the scenes. I don't care about that. All I care about is what the footprints in the sand tell me. And the
Hmm.
footprints in the sand were telling me this thing did not want to bounce. And it got a little lazy there for a while, had a slight lift in price, but, rolling back over, making new lows. We can go by what people tell us, but I think as we're all learning, people we trust on TV sometimes don't speak the truth, and they have an
No.
agenda. They have an agenda. They have a book. They have a reason for saying things they say. I try and tune that out, and I just take my cues from what the price action's doing, like a tracker would do with trying to hunt down, a bear or something.
Yep. Yep. Good advice. Good advice. All righty. Thank you very much, Steve. So let's talk about expectations coming into the session because we all know that those are very important. I like to try to glean mine after the first 15 minutes of the market using my favorite compare count window, which this is what it looked like by the end of the day right here, looking at the large cap stocks in excess of 4 billion on the market cap. So anything with a market cap of 4 billion or higher, I'm tracking those hitting highs and lows with accelerated 1-minute volume in that first 15-minute block of the market, trying to get an idea, kind of referring back to what Steve says, when you're tracking an animal, you look for the tracks. Well, institutions tend to leave digital footprints or tracks, we could call them, in the first 15 minutes with their selling and buying patterns because institutional orders are large, could be hundreds of thousands, if not millions of shares that need to be acquired in a specific name. And in the first 15 minutes, they do have the ability through different various market on open auctions, internal types of routing systems to get large chunks of those orders done, but not all of the orders. Once they get that large chunk done, then they have to kind of slice and dice it, try to have too much market impact while they get the rest of their order filled. And a lot of the times, this can be a very good indicator. So this is what it looked like at the close. Never really recovered from the initial 15-minute open snapshot that I got, which is right here. For those of you who are familiar, you know what this means. That's a pretty significant bias to the downside. Anything over 55%, my ears really perk up and I pay a lot of attention. So this is what it looked like after the first 15 minutes. We had a 57% downside bias. Well, what happened after that? Let's just take a look here. All right, so here we are looking at the 15-minute candles. Here's the first candle for the day. So right here, into this first 15-minute candle, we've got that negative bias, and then we can see, pretty clear this morning. It was a very clear signal. Of course, nothing is ever guaranteed, but after the next 30-minute session, we did put that low in, kind of went sideways for the rest of the day, and then even released for a little bit more of that downside as the day drew to a close. And of course, being in the seat, watching the AIs, it was pretty interesting because, obviously after seeing those readings, I'm like, okay, well, it looks like it's going to be a lot of shorts, maybe, who knows? And then what happened? Well, let's just take a look here. Let's take a look at the Hollies. So we're going to start off with Holly Neo. Let's see. Yep, I'm already on Neo. Neo, as we can see from the toolbar up here, 11 trades. Here they are right here, 11 trades. Finished the day up $1.89 on account of 11 trades. Now, of course, what I was thinking originally, not quite the case for Neo today. I just sorted by risk on here. Well, we do see some shorts on the blotter, and we can see this one in risk off mode netted 21 cents. Let's just go ahead and take a look at that one while we're talking about it. Not that shabby of an entry right up here after this big wide range opening 15-minute bar. AI steps in, takes a piece up here, gets short. Here we are. What was it looking like on the daily? One of the stocks that was at ATH big wide range opening bar. Holly decides to get short here, and we can see that she did clip out 21 cents in risk off mode, but had she stayed in it, would have ended up being a loser because pretty timely exit down here, right? As soon as the exit was made, they get a little wedging right back up to the entry line, a little bobbling around, and then, of course, pushing on through it. I just saw a question pop in here. Why in Holly can I get history, for example, from April to August? I'll circle back around to that, Ashraf. When we're done looking at these trades, we'll take a peek in there and see what's going on there. But having a huge downside bias to the beginning of the day, and then considering we were in this market, right? Just boom, 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 down leg, sideways, down leg. Interesting to see that the top performing stocks in Holly Neo today were all longs, right? And not only that, with the exception of SFIX right here, let's go ahead and take a look at SFIX. I really like this one today for a number of reasons. Number one, when we get the signal from Holly right here, and once again, these are 15-minute candles, so not quite 2 hours into the session. What I immediately liked about this one are these downside wicks, simply meaning sellers did take it down, but they couldn't maintain control. It's always kind of a positive thing for going long, and reverse it for going short. Those wicks were on the top. Be a good sign for a short entry. But we've got a nice, not too wacky of a range here. We got these downside wicks, which are kind of comforting. But then we get the entry signal right here from Holly. Number one, it comes from Holly, from trend play. We can see trend play, not the highest, not the lowest as far as win percentage today. Let's see here. Actually, not too far off the bottom here. I forgot that I hadn't sorted by win percentage, but a nice solid 60% for anything coming out of trend play. Now, we've got the statistical probability behind us right here. We know that this is what it's done thus far, a nice tight little range with these bottoming wicks, and my eyes are automatically drawn to the high of that opening bar here because Holly's coming in right before a potential range break. So we come in with high statistical probability here with a little bit of assurances based on these wicks that, hey, this might be a good trade. We might be able to get in here long and not get stopped out. And of course, we can see as soon as Holly made the entry, bam, in the next 15 minutes, not only did we get up to the high of the day, but we pushed on through. So this is one of the trades where it would not be too far of a stretch to go, you know what, I might have clipped into 100 or two initially with Holly, and boy, as soon as I see it break this, as long as the volume is decent, and we can see SFIX finished the day relative volume of 1.43 with a healthy 3 million shares traded. All right, so nice little opportunity here, a long ability to add to the position, and then talk about pain-free. It's about as pain-free as you can get here. Through a little bit of a wiggle here, but we can also see that's where Holly got out of the trade based on not a profit save or reduced risk, but the timed exit, which is always a good thing. Means stop loss, profit target did not get hit, stayed in for the duration, and she clipped out $2.10 on that SVIX trade. So all in all, on a down day, beautiful long trade, timely entry, room for a second or a bolstering of your position, and then just pretty much off to the races here. Left a little bit of meat on the bone, but hey, I'll take that any day. Once we were up here, hey, if you really wanted to, stay in it, could have played a little bit of the risk on game. For the new people out there, might be going, well, what is this difference between risk off over here that I'm seeing as I toggle back and forth over here? We can see risk off won the day on Holly Neo, as it says up here, meaning this was the mode that was the most advantageous today. Now, a lot of the times we'll see risk on win the day, but that's when we have follow through to the upside or the downside, whichever way the AI might be weighted that day. Obviously today, upside, there wasn't a whole lot of follow through, but had we wanted to stay in here and go, you know what, it might be just be going sideways here. I think there might be a little bit more meat left on the bone. We could have always opted to not get out with Holly as she's closing the trade out on her time to exit. Hang on to it, and let's see, 5101, top side potential of another 77 cents at the top there. So maybe you clip that an additional 20 cents, 30 cents, somewhere in between. Usually we have nice spreads in between risk off and risk on, but you can see it pretty much dries up once we get past OPK here, showing risk off of 33 cents. And had we stayed in the trade, and let's just go ahead and flip on over to OPK there. Probably my favorite trade out of Holly today. Check out the risk on percentage column over here. So with the exception of SFIX, OPK, Tahoe, both coming from the strategy Mighty Mouse, had its day in the sun today. We got these low dollar, more than likely low cap stocks. Let's see, Tahoe, what's it coming in at on market cap? Just under $1 billion, 839 million. OPK, just barely making it over the 2 billion mark. So, surprise, surprise, on a day where the market was continuing down, we had OPK produced. And, hey, that's a beautiful entry right there. Second 15-minute bar, it fires right here at 396. What do we have on that opening bar right here? It's kind of hard to see that. Well, I think that's a wick on top of that dotted line. So once again, we get that wick, which tells us sellers did try to take it down, but it was very short-lived, snapped it back up. We get an entry signal right here at 396. And once again, pain-free is the word of the day here in this OPK trade. Excuse me, I'm having to clear my throat a little bit more. I'm not used to being indoors with air conditioning running. I'm used to the wide open spaces of California. But now I have to live in Texas where you have to have air conditioning. So if you hear me popping in and out, I'm just trying to save you from some gurgling noises there. But in any case, what a beautiful move in this OPK. You can see, let's see, right here is where Holly called it quits, books her 33 cents, but leaves on a percentage basis quite a bit on the table. Now, risk on, risk off. A lot of new users think you have to pick a mode and go, well, I think risk on is going to be the best way to go today, or risk off is going to be the best way to go today. So really it's on a trade by trade basis. What's going to determine whether you stay or whether you follow Holly verbatim and engage in risk off or risk on is going to be determined by how you feel about the chart. So on OPK, if we popped into a couple hundred shares today with Holly, we see her getting out. Once again, that timed exit, it ran the gambit, no stop loss, no profit target, and she gets out right here. And we're thinking to ourselves, well, we just, boom, it's straight up. I mean, why don't we peel out of half of that position, pop out of 100 shares with Holly and book our 33 cents? And I tell you what, because we could have stayed in this one, and said, okay, on this second lot, what I'm going to do is hold on to it, try to make a little bit more. But what I'm going to do on the second lot is revert my stop loss. Not going to stick with my original, but on the second lot, I'm going to set it to break even. Worst case scenario, what happens? You make money on the first lot. If the chart looks good, but the forces of the market are just against us and it does roll back over and peg you out on that second lot, you flat it, you lose a couple of pennies, but you still locked in a profit on the first lot, therefore ensuring I'm not going to let a winning trade turn into a losing trade, but I am going to take more risk on the second lot here. And had we done that on this one from 429 up to 463, 34 cents left on the table there. So that's a nice percentage, add-on if you were able to keep a little bit of that OPK for some risk on, which is simply going, you know what, I like it. I acknowledge that Holly's getting out. I therefore am going to accept more risk and hopefully make more. And if it does roll over and get me, I minimize the damage, right? So once again, in the face of a down market, we got SFIX, nice upside winner, OPK, and not to be forgotten about Tahoe. Looks very similar to what we just looked at in the sense that, I mean, once again, I sound like a broken record here, but remember, these were all in the face of a red market coming down most of the day. So Tahoe, nice entry signal right here at 279. Boom, boom, boom. Here's where Holly gets out. Risk off is also going to be corresponding with this shaded area here. So if we just kind of draw a line here, was there more left on the table? Now, when we see this little consolidation period right here, that's kind of comforting as well. Buyers and sellers, obviously buyers were in charge. We get up here, we mill around for about an hour for these 15-minute candles. And what is that telling us really? Well, buyers and sellers have become equal for a period of time. Now, I also like what I see here after this second little 15-minute doji, right? Sellers took it down but couldn't keep it there. That's kind of comforting. And as we get on here, that might lead us to believe that there might be more upside, so we could play the same 50-50 game. This is especially good for new people to get into the habit of going risk on, risk off, splitting it up, right? Pop out of that first half with Holly, book that 9 cents, 10 cents, keep the other half, and we go from 288, topped out at 304. So not a huge move on a dollar basis, but 14 cents on a $3 stock, nothing to sneeze at there. So all three of these trades presented not only SFIX with a second opportunity to get long based on a range break, since Holly fed it to us early with that nice statistical probability, but OPK as well. Little consolidation area up here. That's the game that you like to play. And Tahoe, all doing the same thing, all low dollar stocks. So who would have thought that today, in the face of a red market, these little micro, or not, can't say micro cap, but smaller cap stocks just didn't care, right? Of course, we're looking at the IWM. It really didn't mimic that, right? We got the same action here, not looking quite as nasty on the daily charts compared to the SPY and the Qs, but not really comforting here. But we still had these small dollar stocks just not caring, defying gravity. Now, let's talk about Fran, because during the day, there was some nice profit potential in this one as well. And I do believe we had a double dip here. All right, so that was the second one. This one, you can see here, I'm on Central Standard Time. So the first Fran was also by Mighty Mouse, the same guy that spit out Tahoe and OPK. Fran was cool for a couple of different reasons. Here's the entry signal right here. Hey, look what we got down here. We got that other bottoming wick. Boom, big green candle right here. We get the signal from Holly. We get a little sideways action, and then boom, 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 on up off to the races. Now, what really stuck out to me about Fran was what we have going over here, or going on over here on the daily. As it was getting out of this little, U-shaped pattern here, we've got some nice gap right here. Now, me and trader guys were talking about, hey, imagine what would have happened with this stock today had the market not been coming down all day. Also, a little caveat here, short float of 27.4%. So if all the short sellers out there were probably like, thank God that today was a down day, because if this thing would have got a little pep into it, more volume came in as this range was broken, I mean, probably would have got a little bit of a, play right here up at the 448 level. But boy, with not the biggest short float that I've seen, but there were some shorts that were nervous here because this gap might have come into play. Didn't happen today, but still at the tops here was up a very nice percentage gain before it rolled back over, really pretty much closed right at that entry signal. So that one might be one to keep an eye on moving forward. If it really gets into this gap and gets some steam, could provide some interesting price action. So found it very interesting today from Neo that all of these low price longs came into the equation and just simply said, we don't care if the market's going down, we're going up, and our users were able to capitalize on that. All right, before we shift into the next mode here, just want to take a look at the questions panel. Tahoe. Okay. Yeah.
Just that
Um,
one on the Holly history that you skipped over. We can only go back so far, I believe, is the answer.
right. So let's
Just
just
like
take
any
a look
history.
here and go into history. And now, what were the months that he was referring to? April to August. Okay. So 60 day, 2 months, 2 calendar months, Steve, with 60 some odd trading days, that's a little
Hmm.
over 3 months. Okay. So here we are in September, August, July. Yeah, that is the reason, because this history right here is tied to the history of everything else, which is slightly over 60 trading days. And assuming there's roughly 20 trading days per month, then the history is roughly 3 months there. So that's why getting back into April, you're having a hard time because of the limitations that we keep. And a lot of people always ask us, well, why do you only keep 60 trading days of history? Well, there's plenty of other databases, services out there that, hell, you can backtest years if that's what you want to do. But, Trade Ideas was born under the, motif of what's working now, what's been working recently in the markets. And that's why, we used to have, hell, Steve, it's foggy right now, but our history used to only be, I think it was 30, and then we took it to 45, and then we took it to 60 trading days,
Okay.
and that was the last upgrade. Don't really know if we have any plans to expand the history, simply because we're interested in what's been working
And keep in
recently.
mind that's history on about 8,000 stocks every day,
Correct.
minute
Hmm.
by minute, 5 minute by 5 minute, going back. Every little filter, every little nuance of that day is um, set in stone and etched. But there has to be a point at which they make room for the new server data. And so for now, that's basically 3 calendar months, 64 trading days roughly.
Yeah, let's just do a little experiment here. Let's just say we'll start on September 10th and go to we'll go backward, and we'll just say August 13th. Okay. And there we have it. Okay. Now it is a little confusing sometimes, because when we come into this little panel here, see how I put my start date up here and go backwards here. So that's the way I like to do it, is make sure you check both bottom radio buttons when you want to start here, when you want to stop here, and then just hit the button. A lot of people think that's backwards, right? And sometimes you don't have the right buttons checked, but that's the way I like to do it. 9, 10, 8, 13, and as you can see here, that's feeding me that nice long history for all those trades in that period. So I hope that clears that little issue up here. We'll just put this right back on real time here. Okay, now, as far as efficiency goes, Holly Neo popping out a $1.89 on 11 trades. We see Holly Grail up here popping out a $1.04 on 17, and just barely above flat with a P&L positive of 20 cents for 6 trades on Holly 2.0. I calculated the per share gain on those right before the close. Comes out about 9 cents a share on average, which doesn't sound like anything to write home about. But when you take into consideration, depending on the commission schedule that you're on, some people can make 1 penny a share and make quite a good living because their commissions are so low. Other people, it takes 2 or 3 cents to get commission covered. But even if you're at 2 cents, that means there's 7 cents left over for us, right? And on a per share basis, that adds up pretty quickly. On some of the bigger days, we've seen Holly kicking out in excess of 20 cents per share. On an average day, average winning day, usually it's up around 15. Today, because of the market activity, only coming in at 9 cents a share overall. Now, there were some short trades. Let's take a look at some of those. Let's pop back over to Holly Grail, and we can see she was a little bit more active in the short area. Let's take a look at this JEC trade, because it is also a perfect example of going risk on. JEC, it's populated up here. Big upper wick. Now this is just reverse of what we were looking at in those little long plays, right? We get this wick, snaps back down. Holly calls a short right here. You know, this always gives me a little vote of confidence that we might be right, because they took it up, but they couldn't keep it there. We snap right back down here. Now, after we do that for the next 45 minutes, you know, all of this encompasses an hour here. What's going on here? We're going up, we're wicking, but you know, if we're looking at the candle bodies here, pretty much going sideways with a slight northern drift. Why did Holly get out of this trade? Reduce risk. And that is because that's what Holly's designed to do. The longer she's in a trade and it's not going the direction that she wants it to, in this case down, then there's a time decay factor. The longer she's in the trade, the more apt she is to pull the plug prematurely, not only on a reduced risk, but on a profit save. Of course, we don't see any profit saves here today, but this one was clearly reduced risk. Wasn't a stop out. See if I can squish my chart up here to get the, okay. As I squish my chart, we can see the stop appear up here, but we can see it threw us a little bit of a curveball, not even halfway up to the stop area. That's what stops are for, ladies and gentlemen. Hard stops are there for a reason. If we're wrong, that's where we're going to take our hit. Now we see Holly getting a little nervous because that time passes. Trade's not working, but we could have easily overridden this one by going, you know what, I'm going to stay in it. It's just going sideways here, but it might release. So if we wanted to take that risk, we could have said, no, Holly, I'm not going to take my 10-cent loser here. I'm going to stick to my hard stop, be patient. And if we did decide to go risk on this one, well, we can see at the close a different story. 54 cents at the peak here. Let's see, 75.96, maybe an extra 20 cents. So at one point in time, trade was up in excess of 70 cents. So that's how we can interact with Holly when we see her closing a trade out on a reduced risk. If we feel comfortable with what the stock is doing, we can override that, go risk on, and accept more risk to hopefully make something on that trade. Yeah, David, I don't think Holly knows what a topping wick is, but decent observation there. That's for, you know, that's where we come in. That's the chimera, the man working with the machine, because that is Holly's strong suit, just so everybody knows. That is her superpower, crunching all the numbers behind the scenes on a daily basis, over and over again to arrive at these, you know, nice statistically weighted sets that get delivered to us each and every session. If we tried to do those calculations ourselves, good luck, we'd never get it done. Probably a team of 10, 20, 30, 40 people working overnight could never get it done. That is the beauty, that is the added value in the AI, are these strategic sets, statistically weighted. And of course, Holly's not a chart reader. So that's where we come into play. With our chart reading skills, a lot of the times we can enhance Holly's performance by capturing some of the spread between risk off and risk on. And that's really the way I choose to look at it. This is a spread, trying to get a little bit of it. Sometimes we'll get lucky in top ticket, but that's the exception and not the norm here. Of course, we had the same different AIs producing kind of similar plays today. Not only did OPK come through Holly Neo, but it also came through Holly Original as well. Now, sometimes that's, well, it's not ever really a good or a bad thing. It's just a thing. But it's a good thing that if you were watching Holly 1 today, you didn't miss out on the OPK trade, because sometimes that happens and we're getting a lot of feedback from our users. They're like, well, when are we going to be able to view all of Holly's trades at the same time? You know, if I'm watching Neo and the biggest winning trade of the day comes out on Holly 1.0, I missed it, right? So currently we can only view one module at a time, but rest assured, in the works right now as we speak in the developmental pipeline, and hopefully soon to make the production version here, is the ability to view all of Holly's signals through one blotter all at the same time so that we don't miss anything. Taking a little bit longer than we expected, but I got faith in the coders, hopefully sooner than later. All right, here, so let me pull up my list to make sure I know what I'm talking about here. Prawn, Tahoe, SFIX. Okay, now I'm going to circle back around to SFIX because I forgot to mention this earlier. I love it when a Holly play coincides with some of my other windows. I got the wrong segment there. Holly Neo. Okay. So SFIX. Not only did we get a nice, beautiful, statistically weighted entry here, and then the opportunity to add to that position as the range break was exceeded, but at the same time, right up here, we had SFIX come through, turbo up family, no resistance, which is telling us, hey, this thing's got volume and it's also at all-time highs. So we've already got two snuggly entries here. One from Holly, one if we want to play the range break, which of course I love. And then as it pops through here, it comes through turbo up family, no resistance, going, hey, I'm at all-time highs and I'm also packing a pretty powerful punch with volume. Now, let's see, I pulled it out of the individual alert here. Let me find it. Where'd you go? Okay. So I just pulled the individual strategy out, and we can see it won't let the arrow, when I click from my window here, be on the breakout arrow because the AI overrides it. It grabs this blue arrow, and now if I click on SFIX through another window, it won't move it. But if it would move it, you would see that the second hit came right as this range break was occurring, or right as this bar closed right here. And so when I see that, man, that's a really good sign, because Holly, range break, and as the range break is occurring, we get it coming through here, which means, hey, all-time highs. When we look to the left, where's it going to bump its head, right? And we see nothing out here. It's the opposite of stock being in the void. It's in blue sky territory. Doesn't mean that it's going to keep going, but it's a very nice attribute to have behind a long trade. So that was a nice little bonus on that SFIX trade as well. It had stout volume and a range break. Now, this is one of my favorite tickers. These animals are in the forest every day, but depending on the day, there's going to be more or less of them.
The woodland critters?
The woodland critters, yes. There's even going to be more or less. But I wanted to take an opportunity to show a few more that came through here today that just simply did not care that we were, in a red market today. So OGS is one that came through. We can see as soon as I click here. All right, Steve. Notice I'm clicking from here, but it's not populating with my arrow here. So I wonder why that's happening. Okay, well, we'll just have to do this. Maybe I moved my ticker here. Hold on. All right. Oh, okay, well, I guess it would help, Jamie, if you were clicking on the right day. I got off. Okay, there we go. Okay. For some reason, my little blue square got pushed down here to the 13th. It's no wonder my blue arrow was not showing up. But here we can see 10:18 Central Standard Time, add 1 hour for Eastern. Right here, OGS comes across. Hey, I'm hitting new highs. Pull this up. See this? Beauty, right? Now, this is indicative of what happened to a lot of stocks that did break out today, with the exception of our low cap movers. Fran did exhibit the same pattern. If you didn't take those cookies at some point in a nice painless trade, let it go around one more time, let that plate go around. When it comes back, only crumbs. So there were some very nice opportunities to the upside with low risk. And you might be thinking, well, what does he mean by low risk, right? How do I assess my risk if I took this nice clean range break here when we had high volume throughput? And by the way, this one finished almost doing not quite 2 times on the rel volume, but 1.88, nice and healthy on the close. Not the most high volume stock on the planet, but hey, spreads weren't that bad. Liquidity was good. A good trade came out of this one today to the tune of about 82.38, up to not quite a point from here to here, but still some very nice upside opportunity. We also had, and by the way, a lot of yellow coming through here today, right? I was surprised to see all the yellow. What does yellow mean? Well, once again, these are the companies that are capitalized below 2 billion. So even though the IWM wasn't doing a big thing and, the market was coming down, we kind of had, Holly popping out some low dollar stocks that just defied gravity. And then also a lot of them coming through my all-time high ticker today, What does that mean? I don't know, but it was very interesting. So a lot of yellow coming through there today. So CNNE was another very good one. We can see right here, nice clean range break, nice tight little consolidation leading up to it. Now, I mentioned low risk earlier on the other one, but I forgot to address it. So these are 15-minute candles. If we get long right here, boom, off to the races, lower the prior 15-minute candle. So of course we always want the reward area, which would have been in this case up here, to be multiples of the risk area. And we can see risk area, reward area. What was that other one that I failed to mention? OGS again, low of the prior 15-minute candle, risk area, reward area here. And the nice thing about these is it either looks like this or it doesn't, right? Pretty simple, flagging. We've got the run up, got the nice little sideways bull flag here. Once it pops those areas right here, if it's coming through here, the volume parameters are already being met. Doesn't take too much effort to look down here and verify high relative volume as well. And even in a down day, boom, we've got some nice upside potential. The last one that came through was C-Day right here. Same song, same dance, same animal. If we were hunting, then if we use the hunting analogy and we were deer hunting, well, this is what the deer looks like, right? If we missed it, if we were eating a sandwich or tending to some other task and we didn't see this thing till it was up here, well, the pattern has been broken already. This is chasing. This is chasing. We want to get it as close to that range break as we can. And once again, with nice, tight risk, nice and cuddly on this 15-minute daily. Reward area up here.
You do have somebody asking for the turbo up, unless I missed it.
I do see that. So I tell you what I'm going to do. I'm going to drop this cloud link in here. And we'll just make it available for everybody by, all right, that's weird. When I click paste, it puts the paste box way over on the other side of the screen. Oh well, at least it worked. So that's the turbo up, no resistance. Check the time here. Ooh, we are running out of time. Okay, so what I'm going to do is I'm going to drop a list here of price alerts into the chat area as well, because these are ones that I just kind of perused based on one of my favorite top lists. And if you pull all these guys up, you're going to see what's going on here. They're all going to be just pecking at all-time highs with a little bit of consolidation in here, right? So, going back to Steve's analysis here, perhaps we come down here and put a little bounce in, right? So when I was looking at today's market activity, I'm like, it's kind of perfect for delivering some price alerts, because if we do go in there and kiss, what was it, the 50-day, Steve, and get a little wick back up, then that could set things up for a nice little, excursion back up to highs. Of course, maybe not. Maybe there's more bloodletting tomorrow and these things obviously won't get triggered. Maybe it takes a couple of days before we bounce, if we bounce. Don't know the future just yet. But if the market does catch some bids and we start gravitating back up to the upper end of that range, well, then these guys will come to life at some point. So what I'm going to do, copy all these guys. And by the way, there's a ton more of these out here. I just wanted to kind of start you off with some, give you an idea of what I'm looking for, share these alerts, hit copy, dump these in, give you something to keep an eye on for the week. All right, and now that cloud link has also been dropped. So the first one is the turbo up, no resistance family, segregated by market cap, sub 2 billion, 2 to 4 billion, above 4 billion, and now you've got some price alerts to keep you entertained as well. So we're right at the end of the hour here. I want to thank everybody for popping in. Scott, if you are ready to walk us out, we're ready to hear what you have to say.
Hey, thanks, Jamie. Thanks, Steve. Yeah, on the way out, a couple items. If you don't have our ebook that Jamie and Steve both contributed chapters to, you should get it. It's 5 Ways to Win in a Post-BTFD Market. It has 5 strategies for you to take with you. Just go to trade-ideas.com/ebook and pop in your email address, and we'll deliver that to your inbox. We've also got an event coming up. Most of the tickets are already sold, so if you do decide you can come to San Diego, you got to act now. Tickets are full price now. TradeIdeasEvent.com has all the details. I believe there's about 15 maybe left to grab. If you do grab a ticket, though, you will get an email follow-up with information about how to get a good room rate at the hotel that's right around the corner from there where most of the people are staying. It's the Kimpton Palomar. So do check it out if you think you can make it to San Diego and attend. Like I said, it's pretty much filled up. We've got a podcast, had a new episode on Friday and got another one coming out weekly. So search for Trade Ideas Podcast wherever you listen to podcasts and just add us as a subscription. And you get the newest episode and you get the next one delivered automatically to your device. There's also a good selection of archives, so check those out too when you get it. Save Incept for September, SAVEINSEPT, all caps, saves you 15% off your first month or year of Trade Ideas. And those of you that are on standard can also use this to do an upgrade, so keep that in mind. Any questions, send us an email, info@trade-ideas.com. And you can follow Steve on Twitter @TodayTrader and Jamie is @QuantBot. Facebook.com/TradeIdeasPro is the Facebook page to like so that you can share stuff we post there with your friends. Again, info@ is the email address to send your questions to. We'll get a recording of this up later on tonight or tomorrow and send you a reminder about how to find it. I guess that's it. Thanks, Jamie and Steve.
All right, thanks, guys.
Super duper. Looking forward to the summit, and thanks everybody for attending. We'll see you tomorrow. Bye-bye.
Later on.